Good morning. Good morning. It is currently Sunday morning, September 8th, 2024, approximately 9:04 a.m. Eastern Standard Time. I got a really good one for you today, more so building off the last video that I did regarding the entries using this particular indicator. This is the indicator, the signal indicator that's not a signal indicator. So I'm not sure if the creator of this indicator, I don't believe they created it for the purposes that we're about to discuss. For the most part, I mean, they did and they didn't, but we'll get into that in a deep dive. So I wanted to do a really deep dive into how this indicator can help you to time your entries and whatnot. So without further ado, let's get right into it. As you can see, let me save this right here. As you can see, this is my technical chart here using the 1 hour USD JPY. All right, the indicator that we're going to discuss today and do a deep dive on is the time frame continuity, TFO. All right. Now, my settings currently, I have my settings at, because I typically day trade, I have my settings at the 1 day, the 1 hour, 30 minutes, 15 minutes, and the 5 minutes. Those are the default settings when you first put the indicator on. I just left it at that since the daily is my higher time frame perspective. All right, now the way that this indicator works, I just want to make sure I'm clear on how it works. What it does is for each of the time frames that you have each of the time frames that you're utilizing. So let's say the hourly, for instance, right? It's taking the current candle, right? The current candle, and it's looking at whether this current candle, if price is higher than the open, then it indicates bullish. If it's lower than the candle's open, and this is just the candle alone, it has nothing to do with the opening price of the session, the day, or anything like that. This indicator is based off of that candle, right? That current candle. So for the 1 hour, it's bearish if the price is currently below the opening price of this candle. And it's doing the same calculation for each of the time frames that you have here. So for the daily, right? If the daily is bullish, right? Right, that means price is above the daily opening price, right? Then the daily on this indicator is going to indicate bullish direction, right? Or bullish continuity, whatever you want to call it. Again, if it's the opposite, if the daily candle is below the price of the opening for the day, then the daily is going to indicate bearish pressure. Again, it does that for each time frame you have selected. It has nothing to do with anything else. It has nothing to do with the color. It has nothing to do with the color, yes, but it has nothing to do with it being a 2, a 1, a 3, anything like that. It's totally independent of other indicators and things like that. This time frame continuity is going solely off of, for each time frame, whether or not the price is above or below the opening of that particular candle. That's how this indicator calculates whether or not these particular time frames that you've chosen are in continuity. If all of those time frames are doing the same thing, if all of them are below, as you can see here, right? And again, this is how we track whether or not we're on the right side of price when we're putting in our orders. That's why this is so important, right? You always hear trade with the trend. What we're not doing here is looking at the daily chart and saying, okay, for the last couple of days, it's been bearish. We're looking at market structure and all of that stuff. We're not doing that anymore because if again, that has its place, but not in our day trading process. I want to catch trades based off of today, based off of today's price action and what's going on today, right now, right? So if I want to do that, I have to be going by the daily. Now, you can take a look and a peek at the weekly to kind of get the weekly perspective. I don't think there's anything wrong with that. But I think when you start going beyond that, you can start to confuse things and confuse yourself. So I think the weekly is safe and we'll look at that. But for the most part, we're going to basically take our higher time frame perspective from the daily, right? So we want, when we put in our trades, right, when we put our orders in, we want all of the time frames we have selected. And you can play with this. You can have whatever time frames it is you feel you want to see in continuity. You can add the 4 hour, right? You can add the 12 hour, the 8 hour, whatever time frames you want to see in continuity for you to be comfortable putting in your trade, right? That's, what you go with, whatever works for you. I will tell you that this did work for me on Friday when the market was going crazy with news. I was able to pinpoint trades just using this, the daily, the 1 hour, the 30-minute, 15-minute, and the 5-minute, all in sync. Boom, I'm in. Here's how I did it. Right. And again, I like to start. I'm not telling you what time frames you need to trade on and analyze and all of that stuff. I'm just showing you what I do and what works for me. So you can take, this knowledge and information and try to apply it to what works for you. Play around with it, right? Play around with different time frames. Whatever works for you and the pip count you're looking for and all of that good stuff. I'm just showing you the concept. How you use it is up to you. I'm just going to show you how I used it and how I was successful this time, because it doesn't mean that, as we know in these markets, right? We have success today using one process. It doesn't mean that things will change and, we won't have to pivot a little bit or make some adjustments or what have you. I try not to make too many adjustments, but again, as I learn different things that I feel like are important and that can help us on our trading journey and give us that edge, because that's what we're doing all of this for, right? To get as big an edge as possible, because we as retail traders aren't the big money makers, right? So we need an edge. We can't see the entire market. We can't see exactly where people's stop losses are. We can't see exactly where everybody's orders are and, trade that way. We're not the market makers. We are not the institutions. We're not the hedge funds, right? We're not the big money. Not yet, anyway. We're getting there, right? So with that being said, right, we use what works for us to the best of our ability, right? With, again, risk to reward management is one of the most important things, along with psychology. Your psychology is so important. I cannot overstate how important your psychology is. And again, you got to get in here, take those licks, get those trades in. Right. All right. So this is how I did it. This is what I was looking at when I put those trades in. For the first one, I'll tell you, this is what happened. I actually got in this one right here. And so the way I use the indicator, so you see, if you're in continuity, right? So if you're in continuity based off of the time frames that you've chosen, right? So this one, so we know that the overall market, right, was bearish, right? So it was heavily bearish. So you'll get those red candles. What happens is from time to time when price is out of sync with the overall trend or overall continuity, right? It'll start to change. And so this one, see this big green candle here? We're not gonna focus on this, but I just wanted to show you for training purposes, that the market, it will change. So when in this candle right here, the market was in bullish continuity. It was in buy time frame continuity based off of these time frames. That happens, right? Again, that's just based off of the opening prices of each of those time frames, being in continuity one way or another, right? But you see that it went right back into bearish continuity on the very next candle, right? And then what happens from time to time when price falls in and out of continuity, right? It'll go gray, right? That's kind of the neutral point, right? So how I like to use this, right? What I ended up doing was I saw this candle here, right? And I said, okay, this is a neutral candle. That means price was bearish. It came down with bearish pressure, but then it went neutral. So we're no longer in continuity. So I ended up putting a limit order right here, a buy limit order. And I had a target up here somewhere. It's no longer what I was targeting is no longer there. But in any case, I had a target up here somewhere, and was able to reach that target just based off of this right here. And so that trade hit, of course, news hit, threw everything out of whack, right? Now, when it comes to news, right, all bets are off. all bets are off. I don't care what process you use, what strategy you got in your back pocket. News will invalidate your strategy in your process in most cases, right? And so with this one, so then the next trade that I was looking at, so then I saw news was about to hit. So what I ended up doing was I placed a sell to get back in the time frame continuity. I didn't know what news was going to do, to be honest with you. And we can talk about that in another video, how I was able to kind of look at that. There's some things that you can look at to get an indication. But again, I would, when it comes to news, all bets are off. You have no clue what it's going to do. It can absolutely wreck your accounts if you're trying to trade the news, because all you're doing is guessing. There are a few people that do know, what's going to happen when news hits, but for the most part, I wouldn't recommend it. But in any case, this is what I did. I put again, this was the 7 o'clock candle. So what I did was I put a sell limit order right here. So I figured, should price come back and tag me in, I can get into this order. And I was actually targeting at the time. I was targeting this low right here. So this was my low or what have you. And what ended up happening was news hit and it went that way first. It went very bullish real quick, right? Fast bullish. I didn't get tagged in. Oh my God, thank you. And so when price came back to settle in, because with non-farm payroll, there's different indicators and news, parts of that news that comes out can say different things, which can cause the market to do different things. That's why with non-farms payroll, it's not just one thing that is being listened to, that people are looking for. It's 2 or 3 different things that they're looking for that can cause the volatility, the swings in the market. Because one part of that news may say one thing, right, and send the market one way. The other part of that may say another thing that sends the market the other way. And so that's exactly what happened. So once that happened, I was tagged into this move right here, and was able to get my take profit hit right, like perfectly, absolutely perfectly, right? So then the next setup that I was looking at, so that was 7 o'clock, 8 o'clock, so news hit, right? So the next setup that I was looking at, I ended up dropping down to the 15-minute at the time. But I'm gonna show you how you can do it even better, right? So I said, all right, let me play around with this, right? So I dropped down to the 15-minute. We're gonna do that right now. I'm gonna show you what I saw. So as you can see, I'm still tracking my 1 hour resistance, 1 hour supports and stuff like that, right? So I dropped down to the 15-minute. Again, using this particular process, this particular strategy. I said, okay, we're in this 1 hour resistance, 1 hour resistance area, right? Or zone. So I said, okay, so price pushed up, right? I didn't get in this up move right here, right? So price pushed up, right? And so I said we're in this zone, so I want to see how price acts when it gets into the zone. Are we going to have a change, and reverse, back, into the bearish, the bearish arena. So I saw price do this. So price was going up, so it was neutral, right? As it was going up, right? We didn't have bearish continuity. It was neutral. I didn't want to get in right there. I wanted to see what it did once it got into this zone right here. For an opportunity, right? So I saw that it turned green. That indicated that it had bullish time frame continuity, right? And then right after this candle, right after the 9:30 candle, right, it turned from bullish continuity to neutral. I said, all right, now we're cooking, right? So when I saw the 9:45 candle, right? See, now we're at the lower time frame. Right. I waited till on the hour till we got in here on the hour. And I said, all right, let's see what happens. And we track it. So I got the indication here. This was my indication. This candle right here, neutrality, showing me that we no longer had bullish time frame continuity, which indicates a possible reversal coming when we get that neutrality, that gray candle. So I said, all right, I'm gonna put my sell limit order at the bottom of this neutral candle right here and see if I get tagged in. So my at that point, I was targeting this low right here, right? I was targeting this low point right here. Actually, it was a little bit further because there was actually a resistance support. There was a support here. or what have you. Yeah, I think the support was out of this candle right here. So yeah, I was targeting this area right here. So anyway, so price obviously did exactly what I expected it to do. It tagged me in, and look at what happened. Right off the back in that 10 o'clock candle, we had bearish time frame continuity. It quickly turned back to that bearish time frame continuity. And basically, of course, I was absolutely happy to see that, and understanding that there was a good chance that price was going to continue in my direction, and hit my take profit. And that's exactly what happened. Price was able to come down and hit my take profit absolutely beautifully. And so that was another great trade. Coming down again, I was done for the day. Over 200 and something, like a lot of pips for the day. Using this particular strategy and process. And so again, which is why I wanted to put this video together. Oh, by the way, I had volume on my side as well. Each of those trades that I put in came with the backing of volume, had plenty of volume to indicate that that was a good trade. You can use volume or momentum, to tell you, if it's a good time to get in. Because if you don't have the volume, then your trade may not go as far as you think it's going to go. It's up to you. Again, if you're trading from key areas, you should be good. So the other thing that I wanted to point out, and I'll point out, I can point it out here. So what happens is like right here, right, we're pushing down and we have time frame continuity mostly in this move right here, right? And so this is what happens is now let's say we're pushing down and the trend is bearish, right? And we get a pullback. So these neutral candles, for the most part, you want to look at them as pullbacks, right? You can get in on a neutral candle, knowing that it's just, it's out of time frame continuity, or you can play it smartly, right? And once you get a red candle, right, that means we're back into time frame continuity. You get in on that. You get in on that move, and then you're back in the direction of the prevailing trend. That's how again, these candles can indicate to you when the pullback is over, is what I'm saying. Like if you want to catch a move after a pullback, check these candles out. Again, these candles are showing you neutrality. Let's go back to the hour real quick so you can see it a little bit better, because that's what we're doing our technical analysis from, not the 15-minute. Right. I just want to show you how this works, right? So we're coming down. All right, we got a pullback. We got a gray candle. Got it. So boom, we pull back. We go back in the time frame continuity. All right, couple of hours, right? We're in time frame continuity. We're in direction of the trend. All right, we pull back. We got a little pullback. And I'm just showing you this for illustration purposes, right? So let's do the same thing here. So bearish, boom, 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 right? All right, we pull back right here in the 3 a.m. candle. So we got a pullback going on. It's a pullback, which ends up, going into news and everything. And then that changes, right? The pullback is over, and you see we go right back red into time frame continuity, right? So if you want to know, right, if price is moving in your direction, you missed that particular move, and then price starts to pull back. If you want to know when the pullback is over, wait till you get the candle that the candle turns back into your favor, into time frame continuity. That's what you want to wait for, and that will tell you that the pullback is over. We're back on track, for the continuation. We're looking for continuation into the prevailing direction. Again, you can play around with this, and you can, see again, because if one of these time frames is not in conjunction with the others, then you don't have time frame continuity. The candle's not going to turn red or green, right? And what happens is, what I like about this particular indicator is, like, let's say the daily will change from time to time. Like you see, we got that green. That means the daily as well. Every time frame on here has to be on board for you to have time frame continuity, right? So we know that if we have time frame continuity, that we're in the direction in conjunction with the daily, because it just won't happen. Now, what can happen is one of these can be out of whack. You're not going to have continuity, but that's why you get the gray candles, because you don't have time frame continuity with all of your selected time frames. So that means, and again, a good indication of a pullback or something, because price is now not in sync anymore for those time frames. So again, I'm not in the direction of the market. But again, if I want to stay in the direction of the market for continuations and continuity, right, I wait for it to change back. Now, let me hip you to something even better, right? The 15-minute is great, but I found one even better, and I realized that there's no harm in using it. So what I'm going to do this week is I'm going to use the 5-minute for that continuity. I'm going to show you how that works. I'm going to show you what that looks like. It looks great. is what I'm telling you, right? So let me show you something. All right. So for this particular strategy and process, right? We see that we were pushing up, right? And we again the 1 hour, this is that 1 hour resistance, right? I like to keep things kind of the same, right? So again, if you want to drill even deeper, now what happens is, right, time frame continuity is based off price. It's not, well, price and time, right? But based off where the price is on each of those time frames, right? And so what happens is time frame continuity is going to happen at the time that it happens. Doesn't matter what time frame. When you get time frame continuity, that means you have time frame continuity in all time frames. It's happening at the same time. Doesn't matter the time frame. So I was like, all right, if I drill down to the 5 minute, right? It's gonna I can know quicker, right? Because just based off of the time frame that I'm looking at. Again, it's just showing you that red candle based off the time frame you're looking at. Doesn't matter what time frame you're on. Time frame continuity happens when it happens on all time frames, right? I wanted to make sure that I push that point because again, drilling down to the 5 minute doesn't hurt you. It just tells you that you got time frame continuity, or we dropped out of continuity from that pullback a lot earlier. So let me show you what that looks like, right? So right here, we got it at 950, right? At 950, we were able to see in this 5 minute chart, right, that we dropped out of continuity in this pullback move at 950. Let me show you what that looks like on the 15 minute. So let's do it on the 15 minute candle, right? So on the 15 minute, right, we were able to see that. So this was the 930 candle, 945, right? Right. So, but not until after this candle would we have known. So we wouldn't have known until the 10 o'clock candle that we were out of time frame continuity. So where in this 945 candle did we drop out or in, or yeah, drop out of time frame continuity from this green candle, right? And that's what the 5 minute candle tells you, right? And that 945 candle, and this is just the 5 minute because we can look at the 1 minute and really get it. I'll show you, right? So at 950, right, is when in that 945 candle, it was 950 when we dropped to neutrality, right? Out of time frame continuity to the upside and went neutral, right? So let's look at the 1 minute real quick, just to pinpoint a little bit more, right? So we said, so with the 5 minute, it was 950. Let's look at the 1 minute real quick, just to see. I'm curious, right? I'm gonna take you with me on this one. Let's see exactly when that happened. Okay, it happened. So we back in that 950 arena. So let's see. We went in. We dropped. The first time it gave an indication was at 940, right? Came back again. That's why we don't trade on the lower time frames, right? Too much happening, right? So then it came back, had a little bit of time frame continuity for a couple minutes, and this is minute by minute, right? Right at 950. So we can pinpoint that 950 was a good time, time to pinpoint when we actually dropped out of time frame continuity from that bullish piece there. You see how it pulled back a little bit, went neutral for a little bit, and then it came back in the time frame continuity right here. In this candle, pushed up a little bit, went in continuity, we dropped out of continuity, right? And then boom. So again, we're not going to use the 1 minute. I just wanted you all to see how that works, what that looks like, that you can pinpoint exactly when we came in and out of time frame continuity. And we see that we went back to bearish time frame continuity right at 10:02. Right at 10:02. Again, we know that it happened in the 10 o'clock candle, but to pinpoint it even greater, we went back to full time frame continuity at 10:02, right? And pushed absolutely out of this 1 hour candle, right? 1 hour block right here. Let's see how many pips this was from the time we got. So we got that red candle right there at 10:02. Let's say we got in the market right there, right? We didn't get a lot of pullback. We didn't get a lot of drawdown. Look at that. I'm gonna go till we went neutral, right? We went neutral in that candle right there. 78 pip move before you even went neutral. Before you got in. Now we got some neutral candles within there. We got some neutral candles in there. But 70 something pip move there. And then you could have got even more. We'll see what that move looked like. I think I ended up getting like 100 and some pips, I'm sure, out of that move. All right, so let's go back to the hour. I just wanted to really show you all that and drill down. So again, for our trading purposes, though, again, I'm going to be looking at the 5 minute for this particular strategy and concept this week. That's how I'm looking to trade this week. What happened to my order blocks? Okay, all right, they over here. Okay, all right, here we go. Okay. All right, there we go. Now that I think you kind of understand the concept. All right, so one other thing I wanted to show you. So we've been talking about using this volume profile here, right? Obviously absolutely relevant. But one thing I wanted to show you was that when you get to a point on your volume profile where there's a lack of lack of volume, right? Lack of volume, I think I said this before. So lack of volume is where it can indicate reversals as well, right? We can get reversals at strong areas of volume, but we can also get reversals at areas where there's a lack of volume. Reason being is because there's not a lot of transacting going on, right? There's not much interest. So the market isn't going to continue to push down when there's not a lot of volume in most cases, or up for that matter, right? That's why you can get potential reversals when there's low volume. So when we're looking at low volume, those are opportunities as well on the chart for reversals to happen as well. So start looking. So we look at high volume and low volume areas for your reversals. So again, the profile is telling. And so what you can do is you can go to a higher time frame to look at the profile and see, what that area looks like on the higher time frame. So let's go to the daily. Let me show you what the daily looks like in this same little area right here. Right? So that same little area right there, right? So the indication, you see that blue is low volume as well. And we see that there's not a lot of volume even, further down, not a lot of volume sitting, below this area here, right? So the volume doesn't increase as we get lower. It actually decreases as we get lower. So that's an indication that, again, reversal indications when there's low volume. So you want to watch for high volume areas and low volume areas when dealing with your profiles. That doesn't matter what time frame. Again, and if you want to verify that volume, right, just go to a lower or higher time frame to get an idea of what volume actually looks like. Okay, to verify that. I wanted to point that out. That was something else that I was looking at over the last couple of days. I wanted to share to make sure you understood when we're using this profile here, where those potential reversal areas might be, right? All right, so I'm gonna do this. I'm gonna do the process on another instrument real quick. I'm gonna use let's use Euro JPY. All right, using the same concept, right, that we just talked about. I want you to see this. I want you to see how this could have been utilized, right? So let's just use this. All right, we can see it. I like the way this is set up right here, right? So price, all right, so we know we were in time frame continuity, right? Bearish time frame continuity, market's going down. Then we fell out of continuity right here. Pretty much the same thing that happened on USD JPY, right? Pretty much the same thing. I just want to show you that, you can do this on, it doesn't matter what instrument or what you're trading, right? You can still, kind of do this and pinpoint this, right? So we know that we dropped out of continuity right around here in this candle. Pull back, right? We know that this is a pullback. So once we pull back, I want to see what price starts to do. In this pullback area. When do we get back in the continuity, right? So let's take a look at it. All right. So this is the 1 hour. Let's go down to our 5 minute and see when did we in that candle there, right? In that 1 hour candle, when did we get back into continuity? All right. So we know. All right. So we're pushing in and we was kind of going back and forth. Going back and forth, we see we had some pullbacks, things like that. And then right at price pushed away right at 10 o'clock, pretty much the same thing. And you can see like now we kind of went back and forth between continuity and not time frame continuity and not time frame continuity within this candle. Again, which is why we do our analysis based off of the hourly, right? So again, when we see this candle, we see that this order block gets created off of the news candle. And again, news kind of throws things off. So this isn't regular. I'm just, for illustration purposes and training purposes, want you to kind of see to be able to do this outside of news messing things up, right? But you can still kind of see it even though news was kind of messing things up, right? Kind of throws things off, or what have you, and things aren't as smooth as they could typically be, right? So when you look at this 9 a.m. candle, we see that we were still out of time frame continuity. We were still neutral, right? So what we do is we say, okay, this candle neutral. So let me wait and see what happens in the 10 o'clock candle. So that's what you kind of want to do if you're still seeing neutrality, right? And you want to pinpoint. Again, news just kind of throws these things off. So again, we're looking at this in hindsight, so it's easier said than done. But the regular concept should hold true in most cases, during regular market, conditions and things like that. News is not regular market conditions, but in regular market conditions, this would be a little easier to pinpoint. Again, we're using Euro JPY here. So again, so I see that, we were still neutral at 9 a.m., that 9 a.m. candle. So we look at the 10 a.m. So we drop down to the 5-minute around that 10 a.m. hour. All right, so let's pinpoint it, right? And we see that, so we look at it, this 9 o'clock candle starts to finish, right? And then we get full time frame continuity. Again, when it happens on all time frames just the same. So when this 10 o'clock candle turned neutral, price was neutral on all time frames, right? Doesn't matter, the hour, the daily, everything. All of these were neutral when this red candle turned neutral. We just happened to catch it on the 5-minute, which gives us a couple more minutes heads up that, hey, we're back in continuity, and we're going to continue, right? So had we got this trade right here, right? So let's say we got time frame continuity, right? We know that this is back in the direction of the trend. So this is the 5-minute chart. So what I would have done, right, is put a order in, right? So we put our order in on the neutral candle. You can put it in anywhere. You can put an entry order. You don't have to necessarily put a limit order. If you know what you're doing, we're going back into the direction of the overall trend, right? So bearish neutrality, once we see it, we put our order in, and a good target for this particular trade would have been this high volume node. And this is on the 5-minute, and this is absolutely fine. We see that we have high volume on this lower time frame. Not typically as important as the high volume on higher time frames, but we see it on this lower time frame, which is absolutely fine. We know that we have high volume sitting here on the 5-minute. But again, let me show you what you could have got out of this. Let's say even at the low of this candle, right? Show you what you would have got if you put an order in at the low of this candle and targeted that high volume node. 97 pip move right there. And it hit. It absolutely hit. That was a 97 pip move right there. Okay. That's what you would have got had you utilized this particular process to get into the move. Again, we're taking our cues from the 1 hour. We're just dropping down to the 5-minute to see exactly when to get, a little bit closer to that time frame, to that time period when we got time frame continuity, right? Again, when it happens at the same time, no matter what time frame, but dropping down to a lower time frame can give us a heads up a little bit sooner, that it happened, and we can place our orders, put our stop losses, and I'll take profits and all of that good stuff. Again, you can do it based off of, if you're using EJ, because EJ has a very high pip count when it moves. You can do the 5-minute on EJ if you have some good pip count ahead of you when you put your move in. As you see, that particular move would have been absolutely great. So again, that's one way to do that. Again, me personally, I'm looking at, the areas where to trade in, on the 1 hour, and then I get in. And you can see it would have been pretty much the same thing on the 1 hour. We get in on this candle. I definitely would have targeted these lows right here, and maybe even this order block, but definitely these lows, which again, had we got in around that time frame, let's just say right here, right? Let's say we got in right there and we just wanted to target the lows. Oh, that's even better. That's even 106 pip move if we just targeted the low, right? Again, because again, we're in the direction of the trend, right? If you think about it, right? We're in the direction. We have continuity and we're in the direction of the trend, right? When you trade these gray candles, that is out of the direction of the trend. It can be done and you can get some good trades off of that, right? But when we get back into time frame continuity in the direction of the trend, that's where we should be getting our bigger trades, right? Again, in regular market conditions, because again, news is not regular market conditions, right? And again, volume backs every move that we just made that we just talked about. And this is EJ. Let me show you for other purposes. We just gonna look at let's look at a Tesla real quick. Let's see how this could have helped us on a Tesla move. Look at that. I'm not even, do I need to drop down? Do I need to drop down to a lower time frame and show you what this looked like? Right? So 1 hour, right? So we saw we were pushing up, right? And then some point in this candle right here, we dropped out of time frame continuity. We can look into 5 minutes and see exactly when that happened. And what happened? Boom, this thing dropped. Imagine if you was in a move like that when this thing dropped. Let me just do it. Let me just do it. I don't think y'all understand what I'm giving you here. I don't think y'all understand. So if we just waited till we got time frame continuity, right? Even if you got in at the bottom, let me show you what this looks like. Show you what this looks like. Even if you got in at the bottom of this candle, if you waited for this 5-minute candle on Tesla to go, right? And you got in, now you would have took some drawdown right there, right? But look at what you would have got if you targeted this low right here. We're just gonna target this low volume node. Right now, let's look at the risk though. The risk. All right, that was 112 pips. That was 112 pips. That was a bit of a risk. That was a lot of risk right there. That was a lot of risk. Look at the reward. You never trade stocks on if you're doing forex. Never trade with high lot sizes, lowest lot size possible, right? But yeah, that's a lot of pips. I'm just showing. I don't know if y'all understanding the gravity of what I'm giving you here, but again, just for purposes to show you that this can be a very, very valuable tool to have in your at your disposal. Let's look at US 30. People like to trade US 30. How would we have traded US 30? Look at that. All right. So we'll push up. We got some time frame continuity in that 9 a.m. candle, right? At some point, US 30 turned bearish time frame continuity. It went from bullish to bearish because the overall trend was bearish anyway, right? So we did get some continuity because this news pushed it up, right? So we ended up getting some bullish time frame continuity, but that changed real quick, right? So it changed right here. Show you the pip count. So if you would have got in that move, drill down to the 5 minute. Let's go ahead and drill down to the 5 minute. I'm not even gonna play with y'all. Not even gonna play with y'all. We're not playing any games here. It's not what we do, right? So again, being careful. We got time frame continuity after this candle right here, right? So boom, I'm gonna take it right off the bottom. I'm gonna take it off the bottom. This candle closes. I got time frame continuity. I get in that move. I'm going to target the high volume node. Huh? Does that say 3,000 pips? The 3,000 pip move? I don't know. That's what it looks like to me. 3,000 pip move. This is the 5-minute chart on US 30. If you had targeted the high volume node on the 5-minute chart, you would have got that right there. Now, again, we see that we had a spike right here, so that would have went against you. And we had the 1 hour support right there. So something to keep an eye on, things like that, right? But we see that we get into continuity as we break that support. And we see that's what caused the market to pull back a little bit at that time and then come down and continue to come down. Now you got another pullback right here. I think this was this was some other news or something that came out. Fed speak. This was Fed speak. That's right. This was Fed speak that pushed this one right here. So again, looking at how we could have taken. Eventually, it did hit this area without coming back and stopping you out of the move. So if you stayed in, you would have been absolutely on target to hit your TP. Just depends on what your tolerance is. I would say, again, play with these to see how they work out for you. Let me see. Do we want to do one more? Let's do GJ. I like GJ, right? GJ, right? Same thing. So in the 1 hour, right? We can do something similar. We see that we have we had time frame, we had neutrality, no time frame continuity, right? Then we got bullish time frame continuity. At some point, it changed, right? Again, we can drill down, same thing, right? Let's see. We would have got into that move on GJ coming out of this 1 hour resistance and targeted the 1 hour support down there. We absolutely would have made 240 something pips in that move, baby. Again, I don't know if y'all understand what I'm giving you here. All right, I'm done. I'm done. All right, again, happy Sunday. I hope this wasn't too long. I hope this was really, really good information for you. And as always, great trading to you. I wish you luck. Let's get this money.